Hey traders, I just want to go over a few things, some mistakes that you can make when trading, and so it has to do with correlation or correlated markets. So if you ever trade like the ES and the TF and or Forex, the markets tend to move together, but that's sort of like with an asterisk, disclaimer that they don't move together exactly. And just to show you my setup, I have a few markets that I switch in and out up here, and then in the bottom right corner I have just smaller time frames to look at the price action. Usually it's like for entries and stuff. So anyway, as you can see about right here, there's a trend line coming up. It doesn't have to be exact for me. We have like double bottoms here and a doji here. You can't get any more like textbook long. It turned out not to go too much. Um, I do have like resistance here, but it still was a nice 20 points. Now, some of you might say, well, if it's going to go up here, it might go up in other markets. But if you look at the other place here on the euro dollar, if you try to go long here, you would not get that much. It looks like 57. You might get a little bit. It was definitely a rough ride. You'd have to have gotten the bottom, and there's definitely not that great of a doji to go into. You're much better off going in right here at, let's see, with some slippage, and maybe at 411, and then you can maybe get about 20 pips, 20 quick pips. Yeah, it goes all the way to the 34. So you would get about like 20 pips, maybe not get all your positions off. So you might call this a halfway successful trade or something. This is where trade management comes in. But still, I mean, if you risk 10 to get 20, that's not too bad. If you could do that consistently for every trade. And then it comes up here, nice move up into other dojis. But here you again, you kind of get, I mean, it's just, the candles just aren't that good here. And so you'd short here and let's say with some slippage, get in at like, I don't know, 425. So the message that you should take home from this is that while you can sometimes trade correlated markets together, like I have these up here so I can look at like, all right, if I want to go long on the euro dollar, but I see that the dollar is going to hit some strength here. It's got like some bullish looking candles on a area of support, then I might think twice about going long here because this is going to start going up, and by proxy, this might start going down. But that is not always the case, and typically it's more about the magnitude of the move. Like they'll kind of both go in that direction, like you see when we compare these two. They both go up, but the magnitude and definitely the ease at which they go up is much different. So that's all I wanted to share. I might get into a habit of posting trades on Twitter occasionally, something like that. But I hope you enjoyed this video and the lessons that you can maybe learn from it.